Going on, everybody? Brenton here for another video. I'm really excited for today's live stream. We're going to be talking about some stuff that I was wanting to talk about yesterday, but yesterday I got caught up with some stuff, you guys, so I apologize for not getting the Discord stuff. I like to I'll take full responsibility for that, so I'll have that available today after today's Discord. So that being said, we're going to move forward with today on talking about the US dollar. Okay, so as we can see that there's a lot of turmoil that's going on with the US dollar right now. We can see that a lot of the US dollar has definitely been taking a dip to the downside. I've been doing a lot of research, been researching a lot of investment banks, what they're looking to do, what their diversifications are, what their allocation aspects are, and what they're going to be doing in the near future. And what I came into consideration is that a lot of these companies are going to be looking to go into futures commodities and try to offset their dollar investments, which is going to definitely be a lot of leeway for us investors, speculation investors, to be making some profit on the downside of the US dollar as we can short in the Forex, the crypto market, and also the futures market. So that being said, you guys, we're going to be looking to see what basics and structures we're going to be seeing now. We're going to go over a little analysis report. Actually, this is an ongoing analysis report of the US dollar. I've been doing this for about a year, and I just put in a lot of information there. So I want to show you guys exactly what I'm talking about as of right now. So glad to have you guys on today's live stream, and we're just going to go straight into it. So this is the dollar analysis that I made, and I keep on adding stuff. Right, it's around 13, 14 pages as of right now. So I'm just going to give you guys some historical background on stuff that I really think that is going to be very it's intrinsic value that you guys are going to need to know. So we're going to talk about central reserves today. We're going to talk about Federal Reserves. We're going to talk about central banks, how they influence the markets, how corporations influence the markets. I'm going to talk about a lot of fundamental things that have a huge thing to do with price action, but it's kind of the backside of it. Okay, so I want to show you guys exactly what I mean here. So that being said, we're going to go straight into it. So as we talked about the 7-year cycle here, we talked about in previous structure how the S&P 500, so if we go to the S&P 500 chart, we can see that the S&P is definitely showing some huge bearish or segments. So we can go into the S&P 500. This is S&P 500. And we can go and see, as you guys can show, that market has definitely been showing a lot of downside momentum. As you can see here, price is still showing that bearish momentum as the MACD and RSI are showing low. So I'm going to go over all these things as well in the markets and showing you guys exactly what is going on. So that being said, we're going to go straight into it. So the US dollar influence. So the US dollar influence is a big thing on the markets in general and how it works. So I'm going to show you guys exactly how the US dollar is established. So the US dollar foreign exchange is about 84.9% of transactions on a yearly basis are based on the US dollar. Okay, so this is like why the US dollar is the powerhouse for all the trades. That's why all major currency pairs, major currency swaps have to have a US currency in them. Euro USD, USD NZD, Euro, Great Britain pound US dollar, Japanese yen US dollar, and so forth. You guys know that the 8 major pairs are anything paired against the US dollar is essentially a major currency pair. So that is what we're talking about when we talk about US dollar and how powerful it is. Secondly is that the US dollar has definitely been going, what we're going to see in this cycle, previously in this cycle here, is what we're going to be seeing in the US dollar in general right now. Okay, so in 2012 we saw that stimulation growth. Into 2019 we're already having the flex of having priced in value. So that being said, the US dollar is the most popular currency. It holds 64% of all central banks and foreign exchange reserves are the US dollar. So that's more than half of central reserves. And if you guys don't know that, there's only 2 countries in the world as of right now that don't have a central reserve, a central bank, a private institution that funds the government. Okay, all countries basically now to this day have a central reserve. So the US dollar has a high power, right? And we also know that the renminbi, which is the Chinese currency, is going to be coming into the popular for the most popular currency. That's why we're having a drop of the US currency, and then we're going to implement another currency into there to keep the fiat currency going, right? Keep this Ponzi scheme going. They have to really come up with something new, right? So something is essentially the same thing with the US economy. The US economy is going to be going to the downside, having a reversal, might go into recession, and then through that recession, we're going to have a new state of paradigm, right? So to go into further designation, I want to show you guys this. So around $580 billion are used outside the country. So on a yearly basis, right? So that's 65% of all dollars. That includes 75% of all $100 bills and so forth. So this is like showing you guys that how powerful the US dollar is. So imagine if the US dollar loses value quickly. As we can see in 2019, it's losing value very quickly. We can already see the US Treasury bond, it's coming down to the downside. We already see that US Treasury bond going from this high peak, or this really, because this is just propped up price, you guys. This isn't a swing high, because as you can see, the market has shown that W formation is, we could see here in this price area, it's just this propped up price. They've been propping up price, just like we saw with the USD CAD, where essentially the USD CAD was showing this huge propping up of price. So we can see that fixed rate of the USD CAD, how price was literally had that market gap between the weekend, right? We talk about how the moon cycles have that huge integration with moon cycles. So look at how, because just as you guys can see, literally on the 28th, the market decides to drop, right? So price is being propped up for such a long period of time, right? Overly sold market materials, kind of like how we see in this graph here, right? Where price is just definitely, we have the enthusiasm, the greed, the delusion state, right? A lot of people get in that delusion state. They just keep on buying, right? They're propping up price. They're giving you that illusion aspect. And then after they give you too much fundamental or I should say psychological aspects of structure, they're going to drop price, which then essentially we saw that drop, right, from to the downside. And then now we're going to see that second drop coming down here, which is going to clear that 7-year cycle, which essentially, this is just a formation. This happens on all different cycles, all different time frames, but you're going to see this same formation happen on all different time frames. So that being said, I'm going to go back into showing you guys exactly what I mean by this. So that being said, so imagine if the US dollar value loses quickly, right? The world economy will start to strive for survivability and sustainability, right? So interest rates are going to be spiked. That's why if you looked at forex.com, or if you guys go to investment.com or Forex Factory, you guys can see the interest rates are a high faculty or high aspect of where the market economy is going to go, right? Because that has to do with interest rates. That has to go with your mortgage rates. That has to go with your credit card rates. Has to do with your banks and your companies, the companies you guys work for. If you guys still do work full time for a company, you know, they are going to be looking into letting people go, because they can't have a sustainable driven company, because the CEOs are obviously stingy. They're not looking to, you know, subsidize on their income just because, you know, of a economy that's going to the downside. What are they going to do? No, they're going to let people go, because they're going to try to keep their expenses, because obviously they have luxurious and high expenses. They're going to let the small people go, right? They're going to let the clerks go. They're going to let the, you know, the accountants go. They're going to let the people that are really doing everything for the company. So this is what happens during a recession. That's why we saw huge unemployment during 2009, 2010, because this is what happens, is that the institutions and the government the corporations, they're going to let the people go that are basically the people that don't make a lot of money, right? They're going to let those people go because they don't need them, right? So this is what we go into survival instinct, just like as humans, right? We get into survival instinct. Imagine if, like, you know, you have you know, you're in desperate need for whatever, water or food or whatever it is. You're going to do things, you know, to survive. So that's what companies do. They do the same thing to survive. So for their best interest, because at the end of the day, guys, they're looking out for their best interest, not for your guys' best interest, for their best interest. So that's why being a speculation investor and taking that initiative and getting that education is very huge, to be able to provide for yourself. And not just that, for you to be able to prosper and be your own boss at the end of the day, because people are only looking out for their best interest at the end of the day. You know, there's a small few of us that actually are here to better other people's lives, and obviously we're trying to grow this community. But for the most point, people are only out for their best interest. So you have to take an accountability what you want in your life, because if you want it, then you have to work hard for it, or work smart for it, I should say. So an unsustainable economy will create chaos and recession to the average economy, which it will, right? We had $1 trillion deficit, which a deficit decreases the stimulation or the stability of economy, right? So we're in $1 trillion deficit. So right now in 2019, what we're going to see is this: we have a 39% of world's debt issued in the US dollar. So 39% of the world's debt is issued into the US dollar, right? We have $1 trillion deficit. We have Donald Trump putting over 500 and something billion dollars into our army, right? To not show a credible, sustainable economy, right? We've had a government shutdown that has been the biggest in history of our government, right? These are all leggings showing you that we're going to be going into a recession, you guys. These are all things showing you that we're going to have a correction. Why do you think we see stock prices going? Why do you see the S&P 500 dropping so much? It's because, you guys, is that we're having a correction. This is a time for correction. Nothing can go up forever. That's why I'm always showing you guys this chart. This is the cycle of life when it comes to every monetary policy. They have to go through this thing. It's called rinse and repeat. The stock market, or Rothschilds call it, when there's blood on the streets, buy real estate. Essentially, what they're saying is that they want to stimulate the economy, get everybody fat and happy, just like sheep, right? Essentially, sheep. What do we do with sheep? We make sheep all fluffy, right? We get them all fat and warm and comfortable. And then guess what we do with sheep? We shed them, right? We take their wool and then we go put it on the public market to sell, right? I mean, not to sound screwed up, but we kind of do that for us humans. Like, we literally, we have a economy that goes up. If you guys look at it, essentially the same thing. We have economy that goes up. Then we have that euphoric, right? We have that 2017, 18, right? The price of income's going up higher and so forth, And then we have that bear trap, but the bull trap, excuse me. And then price drops down, and then that's where all the banks and institutions, they consolidate. Why do you think Bitcoin's doing that? Bitcoin's doing that because they're in it's in a capitalization period. All this breakdown of Bitcoin and cryptos is a capitalization period, meaning institutional bankers are buying up all of those coins right now. So when it rises, the most of it, just like we're talking about with the US dollar, the Federal Reserve, right, 64% of all known banks are measured in exchange rate of the US dollar, right? So what do you think is going to happen when the US dollar is not available anymore? You think they're not going to have control? Of course they're going to have control. They're setting it up. It's like a puzzle. They set these puzzles up. So when it's time to move and to change that shift, they're ready for it and we're not, right? So you have to be like on guard when it comes to things like this, because these are things that are going to be very, very important for your guys' financial future for years to come, for you and your family. Just to be aware of this, and be aware that you could be making some big money in 2019, and it's honestly the best time to be in the markets. You just got to look at it from the right perception. So moving forward, you guys, as we know that this is different, we have 2.5 interest rates, but they said the Federal Reserve wanted to move up the interest rates 1.5 or 0.5 per quarter. So the last thing that the federal chairman said, that they're going to actually lead away from Federal Reserve, but y'all know that's bullcrap. They're going to be spiking those rates up super heavily because of what the market is doing. They have to have a integration process that has to level out. They can't just have a overinflated market and then have the interest rates stay as they were, as what they're at. We'll go into chaos. It'll have too much inflation, right? So this is my belief, you guys. The belief is that our economy is structured. We are due to another recession in due time. 39% of the world's debt is issued in the U.S. economy. So what I mean by good day to you, Justin. Glad you're on here. So I believe that so the structure another recession is due to 39% of the world's debt is issued in dollars. So as a result, foreign banks require a lot of dollars to conduct businesses, right? For example, during 2008 financial crisis, right? And I'm going to actually show you guys exactly what I'm reading off. So 2008 financial crisis, non-US banks had 27 trillion in international liabilities dominated into I'm blanking on my nerves right now. Denoted to foreign exchange currency. So of that, 18 trillion was in the US dollars, okay? So the US Federal Reserve interest isn't its dollar swap line. It's to keep the world's banks from running out of dollars, right? So as we saw that bailout, right? We're always doing bailouts, have that crash, and then guess what? The governments and institutions will bail them out. Why? Because it's a cycle, guys. The word is a part of this matrix. They are essentially the runners of it. So we have to be on our toes by knowing what's going on, by knowing what these banks and institutions are looking to do, because like I said, you guys, this cycle has to eventually come to the downside, and we want to profit off this downside. So that being said, in 2017, the banks of Japan, Germany, France, the United Kingdom held more liabilities in the US in the dollar, right, than their own currencies. Bank regulations enacted to prevent another crisis are making dollars scarce. to make matters worse, the Federal Reserve is increasing Fed funds, right? If you're increasing Fed funds as well as having all these other countries putting their money into the US dollar, that's literally going to detriment all of the, and you guys see how it's not China. We have all these countries, but not China. You know why? Because China is going to be the next world currency. Their currency is going to be the next currency, and I'm going to show you guys exactly what I mean by that. So, to make matters worse, the Federal Reserve is increasing the Fed funds rates. Another indication of dollar strength is how willing governments are to hold the dollar in their foreign exchange reserves, right? 64% of all Federal Reserves are traded, or excuse me, are in the reserve. So governments acquire currencies from international transactions. So they also receive them from domestic business and travelers who redeem them for local currencies. So in addition, some governments invest their reserves in foreign currencies. Others, like such as China and Japan, deliberately buy currencies of their main export partners. Their main export partners. You know why? Because they're smart. They don't expose the capital. If you guys look at GDP between us and if you look at the GDP, the rates between us and the U.S. And China, you'll see the huge difference, right? It's huge difference. You know why? Because they're smarter with their money. And guess what? Their living standards are different. And another thing is that they live below their means, right? Americans never live below our means. We never have. We're purchasing. Even if we can't afford it, we'll still purchase it, right? Because credit. Then we have a debt. Then we go into debt default, right? And then after we go debt default, then that's how the banks have to bail us out, right? What do you guys think the next thing for the U.S. economy is going to have for personal debt? You think it's going to be what mortgage or no? No, it's going to be student loan debt. We're trillions of dollars in student loan debt. Like, it's insane. Like, we're going into these institutions for people that can't even afford to go in these institutions, and then they can't afford to get a job because jobs are obviously scarce, and then interest rates and inflation is going higher. It's not a sustainable economy. You can't have all these people getting bachelor's degree, but then not even be able to make $60,000 a year basic out of college, and then able to. And these are the people that make our economy stimulate. The middle class is the economy's like engine. Like, the middle class is the engine. Like, like that's where it makes most of the money. So if we keep making it harder for the middle class to survive, then we're not going to have a middle class. It's not going to be a rich or poor. So might as well. It's like it's super essential. And then we see Donald Trump coming into into election, who's a complete solicitor for that, right? He loves doing that. He's like, yeah, I don't really care about poor people. I don't care about poor people. I've never known what it is to be poor. So what do you mean? So like a lot of these people, they don't even know. Like, you have someone who's never seen any of that. He doesn't care about the average person. He wants to just mix it that way. So consumer confidence on the downturn here in Aussie, exports and commodities to China down, government all about admitting recession. We are a puppet to the big economics in U.S. China. Exactly, Justin. You definitely got it. That's exactly what we are, man. So yeah, I just got out of an Australian trade because it was showing shorter momentum right now. The thing about the Aussie dollar is that it will still have some more sustainable growth than it will the US dollar. So I'm still going to be going long in that in the long term. But right now, I'm probably going to do a carry trade on that. If you guys don't know what carry trades are, it's essentially putting a lot of money into essentially one carry trades. If you look it up, you'll understand what it is. But it's basically when you're putting money into one significant wheel that you have. It's a leveraged investment wheel, but it has low. It's like having it's a low investment wheel though. It's not like an ETF. It's a little different. So if you look it up, you'll understand what I'm talking about, and that's relatively a good way to invest in the near future. Look into carry trades if you're still into forex exchange. Carry trades are a good way to go. That's what I'm doing for my clients as well. So the truth behind it all. So this is what essentially the truth behind it all, you guys. And I want to just go over the fundamentals before I go into technical, just because I want to show you guys where my paradigm is at. So. In hundreds of banks and participants in the forex market, whether a big or small scale, banks are participants in currency markets not only to set off their own foreign exchange risk, that of their clients as well, to increase the wealth of the stockholders. Each bank, although differently organized, has a dealing desk responsible for the order executions, market making, and risk. Okay, so taking this into consideration, you guys. The role of the foreign exchange dealing desk can also be a make profit trading currency directly through hedging, arbitrage, and also different array of strategies. Okay, but this is where it all comes into play. Accounting for the majority of transaction volumes that are 25 major banks, right, such as Deutsche Bank, UBS, and other as Royal Bank, Scotland, HSBC, Berkeley, Merrill Lynch, JP Morgan, and Chase, or JP's, ABN, Morgan Stanley, and so forth. These are the runners of the market. So if you guys don't know, there's a thing called a sovereign welfare. So a sovereign welfare is essentially a Federal Reserve. It's the Federal Reserve trading in the public market. That's what a sovereign welfare is. A lot of hedge funds manage central bank funds in their hedge fund as well. Like you have a lot of these big Wall Street guys. They manage a lot of the central bank hedge funds as well. That's why a lot of these banks, the banks that didn't go down in the recession in 2008 or didn't get in the bailout, were the ones that were managing the funds and shorting the markets, right? They were the ones that were making the market plummet because they had all those extra money, right? Because how is the market going that quickly down? It has to be the banks that are driving the market. It can't be us middle people. We don't have $500 million per transaction. Like that's them moving the market. That's why we have volume indicators. That's why we have essentially the things that price is showing you guys exactly what price is going. So so this is what this is a market share percentage of what price is. So if you guys are in the Forex market, you guys can take a screenshot of this, or I can put this in Discord, but these are the ratings of 2017. I'm going to have an update of 2019 once that's available, of the ranking systems of shares in the US and the foreign exchange markets, right? Citibank has 12.9, JP Morgan has 8.8, UBS has 8.8, Deutsche has 7.9, and so forth, right? These are the high percentage rollers in the market, okay? So now that we understand more of the understanding of the psychological and the fundamental aspects, let's go back into the charts and we'll map it out, right? So as we can see here, we see that overextended price. We see that price has been trending up. See volume showing up here. We see a lot of bullish market momentum, right? After this upside, what do you see this is at? You see that this is an overextended value of price. Overextended value of price, we see stochastics at the 80 route, which is really oversold, right? Which was consolidating in that area, trapping a lot of liquidity. And then what are we going to see down? We're going to see a short to the downside. That's definitely going to be a nice run, right? So if we're going to see that, we should look at gold, because gold, if you guys don't know what gold is, it's a hedge of dollar, right? So if we look at gold index, we can look at the gold index as well. We can see an increase in value, right? Where we see that price has already been at the low end, just like how price has been at the high end here. We can look at the low end here. So now we have that high end value. So price is now sold, right? So now we're going to have that polarity aspect where then price, now we can be able to move to the upside, where we can have another hedge with gold. As we know that most price, the dollar index, we can see other prices down. Anything US dollar structure right now is down to the downside. We see price remove. So that's a good thing, where price are a good investment wheel for you guys to know what to look for in the near future when it comes to price, into investing, and to have a diversified allocation portfolio, so you actually are be able to sustain this bear market coming to fruition. Or we're already in a bear market, but you guys understand what I'm saying, into a further bear market. So moving forward, we can go into pairs of the USD, Japanese yen. I want to go talk to Bitcoin real fast. As you guys can see, that price definitely hasn't gone anywhere since yesterday. Another reason why I didn't map it out just yet, you guys, is because I don't want to give you guys tricked out and make you guys overly get into a trade where the entry is not ready to be entered yet, because I'm not into a trade yet. The entry is not, well, I don't see a nice entry yet. So as we can see, if you go into the 15-minute chart, I'm at the 4 hour right now. We can go into the entry chart. We can see that price is definitely going to short. I mean, we can even see it short to probably, 3,500. That's definitely a nice area where price is probably going to short to. So I might put that actually signal out for an $80 profit, but we'll see if market sustains that. We see that morning star right there at that formation with that 3-candle morning star. And I want you guys to look at those candle formations. If you guys know the Japanese candle formations, we can go over them if you guys want to. I could totally do that, but want to go back and reiterate and make sure that I have the things that I said I was going to do yesterday. I have that available for you guys today. So as we can see, that price has that morning star action. We can see that reversal to the downside. Probably going to see that retracement here in the near future. We can look at Ethereum as well. Ethereum is looking at price reversal too. We can see that railroad tracks, as we talked about earlier. Railroad tracks is two candle formations that are very perpendicular to each other. As we can see, that price is probably going to have that spike to the upside to trap those sellers before that move to the downside. Probably retest 115, which we saw that was a previous structure of that last railroad tracks. So that's where probably price is going to retest those lows. We can also see that the MACD is showing a very, very high, highly factored volume. So we want to see downside momentum. So we're probably going to see that happen. We can see that the dollar right now is definitely looking towards. So as we can see the dollar right here, it could possibly be showing downside. But as we can see, the market already broke this area. We could possibly see another range of upside momentum. So I'm going to take this into consideration because we are on the 1 hour chart or the 15-minute chart. We can see if we go to the higher time frame, price is still showing that there's upside value. So we're looking to probably look at that 1300 area for price to reestablish. As we can see that nice pin bar right here, formulate right here. So price should definitely be going to the upside. So as we can see, the Nasdaq still showing downwards momentum. As we can see, that's the Nasdaq, the S&P 500. We can see just a huge fall right now. You guys can see we're on the 4-hour chart and the momentum is huge right now, showing to short side. So we're definitely going to be showing short right now. And theoretically, we know we're definitely going to be seeing more downside momentum, you guys. This is pretty self-explanatory from yesterday's video. We're still going to see some downside momentum. Price is already showing some downside. As you see, Aussie dollar, US dollar, I got out of this trade as I probably see a 250 pip reversal before we see that upside momentum, just because we can already see that price on the daily chart, right, is still very high. And we want to see probably that crossover, the MACD, as we saw the crossover, the MACD here. We're probably going to see that transition from that MACD crossover to the downside one more time. So if I move this MACD up right here, you guys will be able to see what I'm talking about. So if I see this MACD crossover one more time to this area, and I see this crossover right here, we're going to probably see another short for about 250 pips. And that 250 pip interval is a highly factored trade. So we're going to be definitely short on the Aussie dollar, US dollar trade, as well as we're short USD Japanese yen, which we're in this trade right now. I did that in the Discord. We took a trade right here from 109.420, so we're already up around 25 pips right now in this trade, and we're going to be holding this trade probably for the next couple of days as our swing trade. We can see price is definitely already having that retrace to the upside, which then we'll probably see another keep on forming to the downside, and we'll keep on seeing price move lower and lower. And our next take profit is at that 108.500 round, so we're looking to take profit right here. So this is our next area of what we're looking for price in a duration of time. So pretty self-explanatory stuff, you guys. I know I'm talking really fast today. Well, I talk really fast all the time, but hopefully you guys are getting some information out of this. We can look at XRP. We can definitely be seeing XRP going high, but maybe we can see a stop out to the downside before we see another drive to the upside. Maybe retest this pin bar low to consolidate price to stop out those traders one more time before they drive price up. So XRP, Ethereum, and Bitcoin, I'm going to be taking a huge focus on for the next couple of days. I'm going to be showing a lot of the market material. A lot of those prices are going to be showing huge momentum. So in that case, we're going to be definitely looking at price on that side. As we can see the US dollar CAD, we're going to be definitely going short US dollar CAD as well. We're just looking for that entry. It's all about entries at this point, you guys. I think we essentially know where price is going to be going. As we can see that price right here, we're in the Euro trade right here. We see that formation, that peak formation low. And as we can see, price is definitely consolidate before the breakout to the upside. We're probably going to have the next breakout soon enough, as this area will probably look the same as this area soon enough. We'll probably see that breakout to the upside. So as we can already see where price is going for most of our pairs that we look for. We're just going to try to find the best entry. That because we want to be able to hold that trade and be able to sleep well at night, you know, knowing that swing trade was at the best entry that we could possibly find, and that we're comfortable and we're confident. It's mostly about being confident. We have to be confident with that entry in that position, because if we have that entry position that we like and that it's actually showing us some value, then we're going to definitely be seeing a lot of upside momentum. So hopefully that this is a lot of good information. So Trex and EOS, some pretty heavy hitters I've been looking at. So Trex keeps performing against BTC. Yeah, definitely. Yeah, Naeem definitely covers those Trex and EOS. I definitely haven't been really covering those, but I know that he's got them like literally on lock, so he definitely knows which ones are going Chase and Justin. You guys are definitely in good hands with those two currencies, or with those two pairs. I'm actually looking into more understanding a lot of those different pairs, because a lot of things with altcoins as well is that he's obviously super good at that. I'm getting better at them as well. I focus on a lot of things that my strengths are at. So moving forward, you guys, as we can see that we can have a lot more value in these trades, a lot more value in these percentages. Like I said, we might be seeing we could even see a downside momentum of the euro dollar one more time. We have a pretty nice stop loss, so if price does drop one more time, we could probably see that nice momentum to the upside, as is MACD. We can see that price could drop to the low one more time and then go up to higher highs. So we're all just looking for entries at this point. You guys definitely have it down of where price is probably going to be going in the near future, as we talked about in the last couple of videos. But I just wanted to reiterate the US dollar, the US shares, the percentage of corporate banks, investment banks, and structures. And before I leave this, I want to show you guys one more thing that's probably going to blow your mind, and it's going to elaborate and really give clarity to what my perception of the market is. So let me just go into this one more time. So thank you guys for being on today's live stream. I know that I talk a lot about these investment banks, but it's such a huge faculty and mindset that really needs to be proven to a lot of these people. So in March 2009, China and Russia called for a new global currency. They want the world currency to be a reserve currency that is disconnected from the individual nations and is also able to remain stable in the long term. That's something called the New World Order they've been talking about for a long time, right? Having a new world currency that everybody uses, so everybody will be in basically a controlled reality, right? Essentially, if you guys are into that stuff, I mean, and all different, they talk about it on TV, they talk about it in other things as well. So China and Russia, as you guys know, is the second and third powerhouse, in the world. So they want the world to make a world currency, right? So China was concerned that the $1 trillion it holds in US dollars will be less if the dollar inflation sets, right? Are we literally having the dollar inflation set as of right now? This was in 2009, right? So that 10 years, right? 10 years past, that 10-year cycle, and guess what? It's literally coming to fruition. Exactly what China said 10 years ago is literally happening right now, like they predicted time, or like the Mayans knew what was going on. They literally knew. So it's like they already knew what was going to happen as well. So always an interesting stream, brother. Plenty to learn. Much appreciated. Of course, thanks, man. I really appreciate that. This could happen as a result of increase of U.S. deficit, right? So I'm just really I'm looking at this and I'm like, wow, this is literally what we were talking about earlier. So this could happen as a result of increased U.S. deficit spending. Didn't we just talk about the $1 trillion deficit that we ran in 2012? Isn't that exactly how price got to where it is? If we look at the U.S. dollar, right, we can go against U.S. dollar, Japanese yen. We can go back into 2012, right? Whoops, let's just go back to 2012. We are definitely have to go to the daily chart on this one. So we'll go back to 2012, you guys. So this is 2012. Isn't that $1 trillion deficit that they were scared of? They literally said this could happen as a result of increased U.S. deficit spending and printing U.S. Treasury to support U.S. debt. We did exactly that, you guys. We did exactly that. 100,000%, right? Donald Trump, $512 billion into our military. $1 trillion deficit to stimulate the economy after the subprime loan crash, right? Literally exactly what China was saying not to do, we did anyway, right? It's like that one kid that keeps on getting in trouble, but expects that he's not going to get in trouble if he does something. It's like Albert Einstein says, right? Doing the same thing over and over again, but accepting a different result. That's literally insanity, right? So we don't learn from our mistakes. We personally we're the small people, but I'm talking about the U.S. economy in general. They're not learning from their mistakes. They're doing the same thing. I mean, this is intentional at this point. I mean, the fact that they're doing this over and over and over again, I mean, it comes to a point where if someone's their intentions are pure, but they just messed up, or they're just literally just doing it because they already know the outcome of it and they're just having bad intentions in general. So there's obviously two different people, right? People with good intentions and do things, obviously, and things don't come to fruition, and people with bad intentions and already want things to go bad in the get-go. So literally the U.S. economy is not, U.S. government, right, is literally saying, okay, well, we're going to definitely having this deficit once again, even though that we know that this deficit is going to really to screw up our economy, screw up the US dollar, screw up the inflation in general. We're not going to try to, right, cut down on our spending, right? We're not going to cut down on anything. We're just going to keep on, you know, oh, we can just print more money. Like, no, man, like that's not how it works. Like, we can't just keep on doing that. Like, that's literally what happens. So like, he said Trump is a good guy. So Trump will shut down the Federal Reserve down. It ain't happening. Trump is just a puppet. He's nothing. He's literally a small penny compared to anything that was ever established. Trump, if you guys want to know the basics and story, so I've studied Donald Trump. So Donald Trump his father was a part of the Freemasons. Okay, the Freemasonry is where a lot of these people have been established in this congressional segments where a lot of our congressmen come from, where a lot of our politicians come from. They come from this area, right, which is a secret society. So Donald Trump is like essentially just doing what he's supposed to be doing. Like, he's not really going to do anything. Just like Donald Trump didn't do anything, just like George Bush really didn't do anything. They didn't really do anything, you guys. The Federal Reserve is a private institution that runs the government. They run the government. They just lend us money. He can't, as much as he wants to try to do anything, he really doesn't have any. Yeah, all of them are. I mean, this is just my opinion, obviously, but you guys, the presidency is just like celebrities. They're just here to make everything seem easier in life, right? To stir us away from really, it's like smoke and mirrors, right? It's just to give us some hope, right? And I shouldn't be saying all this. This is stuff that I really shouldn't be saying. But like, I mean, you guys should know this. It's just like we have little say on that part, but we all have to come together as humans to go against this. We can't just like literally have this like, oh wait, this one person, like, yeah, all of them were, you guys. I mean, in my opinion, a lot of these people like is just like, they're like celebrities, right? Just like you see Donald Trump, he was that multi-billionaire, right? He does real estate, right? He says he's gonna grab girls by their private parts. He's like, he's a wealthy man. I'll give him respect. I've studied Donald Trump. I've read his books. I respect him as a business individual, but morally, I don't respect him at all. And obviously, you know, a lot of people don't. But as a businessman, yeah, I respect Donald Trump. I respect what he's done. You know, even though that, you know, a lot of his the way that he does a lot of business, right, is definitely against what I personally morally think is right. But, you know, he's made success for himself. But is he a leader? It doesn't really matter. You could put anyone in the office and the stuff is going to run the same. Everything's going to run essentially a little different. I mean, this is my opinion, you guys, but we literally have had all of these presidents come into fruition, but yet we literally haven't had a prosperous economy ever. There's been no time where the economy or the United States hasn't been in a war, hasn't been scared of someone trying to kill us, or hasn't been talking about debt since the beginning of presidency. Like, literally, it's just literally people electing these people in office to make themselves feel credible, like they did something for their nation. And then at the end of the day, they literally are just like, oh, wow, like, you know, what did he do? Like, okay, he did a little bit, but he didn't really do that much. He didn't really do anything. It's about the people that own them. It's about the bigger people, the people that own the banks, the people that own the whole world. Those are the people that are running the cycle. Like, not this president, not what we think the president is doing. Like, I'm seriously, do your research. Do your research. Study like this stuff. Like, look at secret societies, look at business factors, look at banks. You know who we're talking about? We're talking about JP Morgan, right? We're talking about the Rothschilds. We're talking about this European family that was even bigger than the Rothschilds. That they're even bigger than them. Just do your research, you guys. You'll have a lot more understanding where this is coming to. Because if you dissect literally what they've done, and then you put it into a monetary aspect of it, you'll see like, whoa, like literally it's a cycle. They keep on doing this. Okay, for instance, you guys, this wheel, right, wouldn't be existent. This wheel right here, this 7-year cycle, or this money cycle right here, wouldn't even be existent if we had more say in the economic structure or power, right? This wouldn't be existent, right? The stock market wouldn't be predictable if this was different, right? If Donald Trump really had a lot of play right into what we're saying or what we're doing in life, or in our economy, the stock market will be completely different. But if you guys look at the stock market, it's essentially exactly how it was in 2007 before the crash. It's literally the same. So like, as much as that I want to like have, you know, theoretically a lot of hope on that aspect of it, I like to live in reality too. Like I like to like know where those structures are really coming from, have the statistic data and why those things are actually coming to fruition. Not just looking at the news and talking about the news and that aspect, because the news is just like celebrities, you guys. They're just here to entertainment, just like sports, entertaining you guys. We're getting entertained, but it's not a solution. These aren't solutions. They're just entertaining us. They're letting us be in our cycle, right? Our cycle of entertainment, right? That's why we have all these entertainment faculties, because they don't want you guys to know the real truth of what's really going on behind the scenes, right? Because if you did, you would blow your mind, right? You would know that this, what we call reality, isn't really reality, as what we aspect of what we create for ourselves, right? There's a lot of things that we can really change in our lives, right? Theoretically today, right now, you could change your life for forever if you really wanted to. It's just about creating that in your own conscious mindset. So like, when it comes to this stuff, you guys, the stock market is literally market in human behavior. Like, it's literally the same thing. So that's why I have this graph earlier, guys. So as you guys know that I'm really into quantum physics and neuroscience, right? I like to study the conscious mind. So as you guys can see, right, previously in structures, right? So he's bringing millions of jobs back to states and jobs that gets people out of poverty and criminality. But I do like a lot of Trump. He is doing it in this country so far. Unemployment. Yeah, like I said, like, I completely have a lot of like respect for, you know, Donald Trump. But like, do I believe he's affecting me as a person? No, because what I do has nothing to affect. What I can do with my own tools, I can do in any economy with any presidency. It has nothing to do with me personally. With people that have jobs and like live off the government and like have to like believe that the government has to change for them to be wealthy, cool for you. But like, don't expect like people that like a handout's going to happen for you, or don't expect like your life is going to, you know, from making $40,000 a year to like, you know, upwards of $500,000 a year by you just thinking of it. You know what I'm saying? Like, it just essentially has no like effect on me personally. Like, I don't like, it doesn't have anything to do. But I get what you're saying though, and I appreciate you for you know, seeing the polarity of that, right? Because I don't think anybody's evil in this world, right? People can have evil intentions, but at the end of the day, most people are good people. So I believe that personally. So like, yeah, I believe Donald Trump's a good person. I don't really want to stop talking about politics that much, you guys, because I'm not really into politics at all. As you guys know, I have a different mindset. But I agree with you are saying, and I appreciate you for talking about that. But to talk about statistics and neuroscience and quantum physics, as well as the stock market, as you guys know, the human anatomy is based off human psychological determination factors of mathematics, right? So as we can see that the human anatomy is also mathematically formulated, right? We look at the Fibonacci sequence. We have the pineal gland, right? And then we have the cerebral. You see the cerebral hemisphere. We see the markets work in the same way. So as you guys can see, this is the Fibonacci sequence, right? So if you guys go to the Fibonacci sequence, it's available in the stock market. So we can put the Fibonacci sequence, the same thing, right? We have the same percentages in the value, and they are completely credible the same way, right? This is called the Fibonacci retracement, right? So the Fibonacci retracement is a mathematical simulation of the universe. We're just a player in it, right? We're just a player in this algorithm, right? This is just where we live in. This is what we have to accept, right? This is just the reality of it. So knowing that, right, the people that created the stock market knew that human behavior and human faculties have a huge influence, right, congruency into the stock market. So what do? They put mathematical simulated formulas that are going to be super congruent. That's why we use the Fibonacci retracement, right? The Fibonacci retracement, harmonics, the Fibonacci extensions, all those assemblants are based off predetermined market behavior and market psychology, which is human psychology. That's why I have a picture of the brain, because the brain, if you guys know, the human psychology comes from the brain. So that's why everything is humanly correlated from a mathematical structure that is bigger than any of the stuff we talk about, politics, like anything. Like all of this basically structures down to science and mathematics, essentially. So like that's where I come from my aspect on how like I go about my trading, not really more so about like the way that the studies show or price is going to go. So I want to show you guys something that is going to blow your mind. So so the market previously, so I took this graph picture in 6/17 of 2018. So as you guys know that this graph, so I'm gonna show you guys exactly what I mean. And I'm not like doing this to show you guys where like, I'm just showing you guys that this actually works. Like this is actually, it works, right? So as you guys can see that this is 6/17, this graph, right? So so the media only releases what they want us to know and perceive, fear, monger tactics, and yeah, exactly, Justin. You completely are on the same wavelengths. So yeah, fib is like a universal signal sequence. Exactly. So you guys are completely like, yeah, on the same page. I love it. So I'm gonna show you guys exactly what I mean. So in 6/17, I did this Fibonacci retracement on this hypothesis of the US dollar to the Japanese yen, okay? So if we were to go to show you guys where I'm talking about now, so if you guys look at the price, so this is 6/17. So this now is a formulation of price as of that time, right? So as you guys can see that previously market price was a little higher, right? Market price was at what? 113. I said that it was going to sell entry on the USD Japanese yen was going to be at 113, right? So if we see right now, when was the sell entry, you guys? 113, right? This is 6 months ago, right? Before, yeah, this is 6 months ago, I think. Yeah, it was 6 months ago. So like, I'm showing you guys, I'm not doing this to be like, oh, like I predict, I'm a genius. Like, I'm not a genius, you guys. I'm just showing you that the way that I was able to come up with that predetermined aspect was using price predictions, market psychology, market factors. Like this is why I was able to basically perceive the market beforehand. So Brenton, what website can you recommend when trading Forex and other assets other than crypto? So I use Forex.com. I use Oanda. You can use Trader's Way. You can use Hugo Way. That's one that Naeem. I'll look into more. But since I specifically focus mostly on Forex, I've used Forex.com for about 3.5 years now. I've used Oanda for about 1.5 years, and I obviously have separate accounts for these because I do separate type of trading on them. I do swing trading and scalping, and then I have my my intraday trading strategies different, and then they have different marginal aspects of it, right? Like Trader's Way is 200-to-1, right? And then Forex is 50-to-1, and Oanda is 50-to-1, which you can do 200-to-1, but you have to have a certain amount of money in your account as well. So like, I'll go over different brokers. Actually, K-Bob, that's a great thing. I want to talk about that in future videos. I will show you exactly how I was able to. Hey, Michael, good to see you, man. I'll show you exactly how what brokers are the best to use for. So I'll do a full video on that. So we'll be able to like map out brokers. I'll show you guys my broker. I'll show you all that stuff and what the best thing is, you know. And I'm not really I don't really like to show you guys all the the personal stuff, but I'm willing to show that too. I don't really care. So I'll show you guys exactly how that works and stuff like that. So with price in general, like we want to be able to show like for understanding this, you guys, like as you can see, price is just making a swing high. So now we're gonna see a downward market trace, right? So just to show you guys again, like this was 6 months ago that I did this market analysis, you guys. This is like in June, right? June of 17th, 2018. I said that price was going to sell at USD Japanese yen, and you guys can see the date right here at 6/17 at 1300. So then if we looked at price literally at 1300, it sold, right? So like this stuff isn't like just literally, and this is what this short started in December, so 6 months later, right? So like this stuff isn't like rocket science. It's just you have to be very focused and confident with your predictions. And what I mean by very confident, you just got to be willing to accept whatever fears you have against whatever. Just let them go. Like just accept that you got it. Like in there you have whatever you want, right? You just have to be willing to let it out, right? So a lot of these gurus that tell you, oh, I helped you get there. No, essentially you've already had all this knowledge available to you in here. You just had to accept it and let it out. That's all it is. It's just your inside power, right, of you being able to transit and do everything you want. So I hope you guys enjoyed this video. I know I ranted a lot about a lot of other things, but you guys know definitely a lot where price is going to go. We've already had a high hypothesis of where price is going to go. I just wanted to show you guys that this is really possible. Like, you know, like predicting price 6 months in advance. Like, that's what clairvoyance is. It's just essentially it's just being interconnected to something that, you know, yourself, right? And having that inner connection can give you something of a higher awesome. So I'm going to actually do the harmonics things. Nice things. We'll check forex.com out. Yeah, I think many people want to know about the best brokers. Of course, yeah, definitely we'll do that in the next coming video. So really appreciate you guys' you know, comments, and thanks you guys for being on today. And you know, everything is super going really well. As you guys know, that I've been definitely doing different things as well as trading. I've been isolated with a lot of clients lately, and you know, building a program for you guys for Traders Profit Club. Actually, I've been doing that nonstop. So I'm trying to give you guys the best information possible. And I have, you know, I'll give you guys a sneak peek tomorrow. I'll give you guys a sneak peek of the program itself of what I've been working on for you guys. So I'm definitely like knocking it out. So I want you guys to be able to have this information to, you know, kill it in the markets and become very, very prosperous traders. And if you guys are already prosperous traders, already being like, okay, like he's just re-solidifying what's going on. So awesome stuff, you guys. So moving to our next video, we're going to be talking a lot about price action and other things like that. But I will see you guys tomorrow, and I'll be in the Discord, and I'll make sure I'll do that harmonics breakout for the Bitcoin, and give you guys a market health update today. So hope you guys are trading, and look at Michael already killing it right here. Identifying trade setup, predict move, decide trade, execute trade. You already got it, man. You guys can screenshot that because that's literally everything you're going to need to do. So awesome to see you guys here on today's live stream. Thank you so much for being here. And I'll see you guys. Thanks, Justin. I really appreciate it. I will see you guys tomorrow. Bye.